Now, of course, as I said, there Dangote Cement reporting an 80% rise in first quarter earnings, and we have with us the CEO of the company, Edwin. We have with us the CEO of the company, Edwin Devakumar. He's in studio with us. Thank you very much for joining us today.
Good evening.
Good evening. Now let's go straight into those Q1 figures. Now, growth margins increased significantly by 65%. Tell us, is this mainly driven by price increase or volumes growth?
Well, surprisingly for you, the prices have remained steady for the cement in Nigeria over the past 5 years. The cement prices, in spite of the increase in volume, the prices have not dropped, but the prices have not increased. In fact, in Nigeria, the price of every single element, including the cost of each item of our inputs, have risen, but the prices have been steady. So the increase in our profits has come primarily through increase in volumes.
However, can we expect that run rate to be maintained for the rest of the year?
We believe we can maintain this because if you see compared to the last this year, the Nigerian market has increased by about 16%, but our own sales volume has increased by 38%. So we have been able to take a substantial volume of the market to push the increase in production. We expect the margins to be retained in this year.
Now, of course, by the end of 2012, the company was preparing to make Nigeria an exporter of cement to the neighboring countries, and in the first quarter of 2013 we hear that goal was realized. So what impact did that have particularly on the Q1 numbers?
Well, in the Q1, if you look at the Nigerian market, as I said, we have increased our sales volume by 38%. So we are trying to even push as much cement as possible into the Nigerian market, the demand of which has been growing up. So what we have done is we have just exported trial volumes into the neighboring countries, so which were in terms of volume they are pretty insignificant. We sent these trial volumes only to ensure that the logistics and the sales in those countries are established. So when the demand in Nigeria, and if the demand in Nigeria drops, then we would continue to push those volumes into those markets. So the contribution to the margin for this first quarter has not come through the export.
Let's talk a bit about your financial costs. We saw that rising by 144% in full year 2012, and the first quarter also up 62%. How is that likely to change going forward?
Well, if you look at my EBIT and EBITDA, that has remained the same, or even it has moved up. So yes, the costs have gone up primarily because we doubled the capacity of our flagship cement company, and we increased our volumes again by commissioning 2 more cement lines near Lagos. So because actually 3 cement lines came into production, obviously our costs have gone up. But as I said, my EBITDA has even improved compared to last year.
Now, of course, a tax holiday has been enjoyed on your new production facilities, that's the Ibese and Obajana facilities. However, the Boko plant, the tax holiday for that plant expires this year. So I think a lot of people would want to know what impact that will have on your earnings for the year.
Well, for this year, yes, it will have a marginal impact, but we are also expanding our capacity. As I said, in Obajana, we are putting a 4th cement line. In Ibese, we are putting 2 more cement lines, which would all come into production next year. So we would, the impact of the tax through increase in Boko would be mitigated by the tax benefit which we get from the new production volumes.
Okay, now let's talk a bit about your Africa operations. Of course, a major part of your revenue for the year 2012, 96% exactly, came from your Nigeria business. I think it'd be interesting to know the contribution that we're likely to see from your non-Nigeria business going forward, and if that is likely to improve.
Well, if you look at it, the production volumes to come in 2013, it will not be very significant because we are trying to expand our operations in Ghana. The Sierra Leone operations would come through this year, and Senegal would get commissioned this year. And all these production volumes will have a significant impact in the next year. In addition to that, our South African operations and the Zambian operations would also come into production next year. So as this year it would not have a significant impact. Next year it would have more, and the year after much more than that, because the Ethiopia and Tanzania operations would also come into fruition.